Welcome to today's Explainer. Today, we're diving into a topic that, honestly, usually feels guarded by this intimidating wall of financial jargon. I'm talking about personal finance and the stock market. You know, if you've ever felt like investing is this exclusive club that you just don't have the password to, believe me, you're definitely not alone. But we're going to break down the actual mechanics of how wealth is built using some really clear, straightforward visuals. By the time we wrap up here, you are going to have a rock-solid foundation. So let's just jump right in. To start off our journey, we really have to look at the ultimate trap. Ask yourself, what's the absolute biggest mistake that financial beginners make? You know, you might think it's buying the wrong stock, or maybe trusting a shady financial advisor, or, I don't know, just spending way too much money on everyday coffee. But the source material reveals something so much more fundamental. There's this silent trap that catches almost everyone when they're first starting to save their money.
All right, Section 1, the cost of doing nothing. Why cash actually loses value over time.
We're so often taught that keeping our money locked away in a totally standard savings account is the safest possible path, right? But playing it completely safe by just doing nothing, it actually costs you. Think about the typical beginner approach. Your money just sits there in a bank earning almost zero, while the cost of everyday things like groceries, housing, and gas keeps going up and up. Historically, inflation hovers right around 3% every single year. So that cash is literally silently losing its purchasing power. Wealthy individuals, on the other hand, well, they don't just hold cash, they invest it. They create a system where their money grows automatically, intentionally outpacing those rising costs.
Which brings us to Section 2, how money grows automatically. Unlocking the power of the market.
This is where we transition from being just a simple saver to an active participant in creating wealth. The whole goal is to set up a system where your money is doing the heavy lifting behind the scenes. Let's look at a really concrete example, just $100. If you took just $100 every single month and put it into the stock market over, say, 30 years, well, the result isn't just the $36,000 you put in. No way. Thanks to the mechanics of the market, that money could grow to well over $100,000. A consistent, totally manageable amount triggers this very specific financial engine. And that engine? That's compound growth. Honestly, this is the core concept you absolutely need to remember from all of this. Compound growth is the powerful process where invested money grows massively over years. Think of it kind of like a snowball rolling down a really steep, snow-covered hill. It starts out super small, but as it rolls, it packs on more and more snow, getting larger and moving way faster. It's not magic, it's literally just mathematics. Your money earns a return, and then that return earns its own return. That snowball effect is exactly why investing matters so much. Moving to Section 3, investing is not gambling. Changing your mindset. You know, the primary roadblock that actively stops people from even starting, it's usually not a lack of money. It's actually a really profound misunderstanding of the market itself. Investing is absolutely not gambling. Beginners frequently freeze up because they picture the stock market as this giant, chaotic casino where you pull a lever, spin a roulette wheel, and just cross your fingers hoping you don't lose your shirt. We need to completely dismantle that myth right here, right now. Because when you approach it correctly, investing is the furthest thing from rolling the dice. Actually, real investing simply means buying assets that grow over time. You aren't placing some blind bet on a random outcome. You are purchasing a real piece of an asset. Think of it like owning a tiny, tiny fraction of a company that's out there right now, right this second, selling smartphones, shipping packages, or developing some crazy new software. You're buying into a real, productive entity that's fully designed to innovate and generate value as the years go by. You are an owner. You are not a gambler. Section 4, the power of index funds, the easiest way to start. Okay, so once we realize we're buying real assets, the obvious question is, what exactly should a beginner actually buy? Well, the good news is you definitely do not need to be some hotshot financial analyst picking winning companies out of a hat. The absolutely easiest vehicle is an index fund. This is an investment that simply tracks a ton of large companies all at once, which spreads your risk across the entire market. So instead of placing a super risky bet on one single company and just praying it does well, an index fund lets you own a tiny, totally diversified slice of the entire economic landscape. To give you a real, tangible idea of what this looks like, just think about the absolute titans of the economy. We're talking Apple, Microsoft, Amazon, and literally hundreds of others. When you buy into a broad index fund, you hold a piece of all of them simultaneously. And this is exactly why so many financial experts heavily recommend starting with a broad index fund like the S&P 500. The beauty of this whole approach is that if one single company has an absolutely terrible year and fails, well, the other 499 companies are right there to prop the fund up. You're capturing the growth of the biggest companies in the world in just one simple step. Now, I totally get it. It is perfectly normal to worry about the daily news. We constantly hear about recessions, market crashes, and short-term panic. But look at the history. Historically, the stock market has grown over long periods despite all of those crashes, recessions, and moments of panic. The long-term historical trend points decidedly, consistently toward growth. When you own the whole market through an index fund, you're effectively positioning yourself to ride out all those short-term storms and really benefit from that long-term upward trajectory. All right, Section 5, the ultimate investing secret, why time is your greatest asset. If you take away literally only one thing from today's explainer, please let it be this. Your greatest asset is not a massive fortune, it's the calendar. Think of two totally different people. The one who starts early actually needs to invest way less money overall, simply because that compound growth we talked about has the decades it needs to work its magic. On the flip side, the person starting late, they have to aggressively put in significantly more cash, and even then, it's incredibly hard to catch up to the final totals of someone who just simply started early. Time literally does all the heavy lifting for you. $5. That's it. Many of the investing apps available to you right now let you start your entire journey with exactly $5. Thanks to this brilliant modern innovation called fractional shares, you can buy a tiny little sliver of an expensive asset with just the spare change floating around in your pocket. You don't need a mansion, you don't need a fancy finance degree, and you certainly don't need any Wall Street connections. The barriers to entry have been completely 100% removed. All you need is $5 and the willingness to just begin. So how does all of this actually build into a practical framework for your success? Well, if you're a beginner, these are your 3 golden rules. Step 1, start small. Whether it's $5 or $100, just get in the game. Step 2, stay consistent. Consistency is the absolute fuel that feeds that compound growth engine. And step 3, think long-term. Ignore the short-term panic of the 24-hour news cycle and remember that real, lasting wealth is built by holding growing assets over the years. As we wrap up this explainer, I want to leave you with one final, absolutely vital question to ask yourself today. What will your future self thank you for? Will they thank you for leaving your cash sitting idle, just losing to rising prices year after year? Or will they thank you for starting small, staying consistent, and letting time and compound growth work their magic? The choice is entirely yours, but the tools are right in front of you. Go ahead and start your journey today.